Welcome to BigONE Weekly News Update. I'm Mia. Global markets entered the week on a defensive footing as renewed trade tensions, political uncertainty, and resilient inflation weighed on risk sentiment. While cryptocurrencies delivered mixed results, traditional markets reflected a clear shift toward caution, with higher yields, a firmer dollar, and record highs in precious metals. Crypto markets show diverging performance. Bitcoin briefly climbed to $97,000 last week before retreating, finishing up 2.9% at around $93,700. Ethereum outperformed with a 5.1% gain to roughly $3,285, while Solana slipped 1.3% to about $138. Privacy-focused cryptocurrencies stood out, with Monero, XMAR, and Railgun Rail reaching new highs. Cash CC continued its sharp rally, now up approximately 700% year-to-date, highlighting renewed interest in privacy assets amid regulatory uncertainty. Risk-off sentiment returns to global markets. In traditional markets, U.S. Treasury yields rose to 4-month highs after Donald Trump downplayed expectations of Kevin Hassett becoming the next Federal Reserve Chair. The stronger dollar and rising yields pressured equities, with the S&P 500 down 0.38%, the Dow Jones off 0.29%, and the Nasdaq lower by 0.66% on the week. Trade concerns resurfaced after Trump threatened tariffs tied to Greenland-related disputes, while reports suggested the EU is considering retaliatory tariffs on 93 billion euros of U.S. exports. Global equity futures weakened as risk aversion intensified, while gold and silver futures pushed to fresh highs. A key test for the taco trade. After U.S. markets closed on Friday, Trump announced a 10% tariff on European countries, reviving last year's taco trade narrative, where initial market stress was followed by policy-driven calming and reversals. This time, however, with U.S. equities closed on Monday, markets have additional time to digest the news, raising uncertainty over whether the familiar pattern will repeat. Inflation and Fed uncertainty cloud the outlook. Recent U.S. economic data remain firm, complicating expectations for near-term rate cuts. While core CPI eased, the improvement was driven by volatile components, with services and housing inflation rebounding. Core PCE inflation is therefore likely to remain sticky in the months ahead. Political uncertainty has further clouded the outlook, as speculation grows that Jerome Powell could remain on the Federal Reserve Board after his term ends in 2026, potentially creating overlapping centers of influence. At the same time, Trump has hinted at nominating a less dovish successor, prompting markets to scale back expectations for multiple rate cuts in 2026. Regulatory setback for digital assets. The Clarity Act, a major digital asset market structure bill, was postponed in the Senate after extensive last-minute revisions. Industry pushback, including the withdrawal of support from Coinbase and opposition from key lawmakers, left the bill short of votes. Negotiations are expected to continue, with a revised version likely to return for consideration. Week ahead. U.S. equity markets are closed Monday for Martin Luther King Jr. Day. Focus shifts to Tuesday's Supreme Court opinions on tariffs and the start of the Federal Reserve's policy blackout period, as investors remain alert to further policy and geopolitical developments. Join BigONE today and take advantage of the growing cryptocurrency market.